Today, we'll listen to two legendary venture capitalists, Bill Gurley and Brad Gerstner. These two in particular have a very good understanding of what it takes to succeed in ride-sharing, as they were early investors in Uber. So the big questions now are, what are Tesla's chances for launching a successful robotaxi business? Will they need to partner with Uber? And how might this be rolled out? I've got Jeff Lutz joining us. Jeff is an ex-chief executive officer of supply chain in multiple Fortune 100 companies. Thank you so much, Jeff.
Yeah, great to be with you. This is a fun one.
It's a fun one because both of these guys are not just VCs. They have been studying rideshare. They're very deeply into Uber's business model. And now they start talking about Tesla's RoboTaxi business. And they've got some good points. There's a couple points that I didn't agree with, but the rest are great analysis. These guys obviously know what they're doing, but you just have to keep in mind that they're probably they're subjective, right? Because they're biased, because they are investors, both of them, in Uber. So just keep that in mind. So let's start off with, props to this guy, Charity Trades. This is where I saw this coming from. He said Bill Gurley and Brad Gerstner, who's a VC at Altimeter Capital, are both investors in Uber. Interesting conversation. So he shared this, which I thought was great, really nice. It's a timeline of recent events, right? So all the way from August, when Elon live streamed version 12. Version 12 was released to employees in November. A month later, it was released to 12.1 was released. A month later after that, 12.1.1. So about 28 days, 20 days, 9 days for these 0.1 releases. And then 12.2, 19 days, 9 days. So you can see the pattern here, 23 days for 12.3. Then Elon tweets, no longer AI compute constraint in March. Then you can see 12 days, 2 days, 2 days, 3 days. That's what's shocking everybody.
It's a great summary.
This is how fast this is moving. Ashok Swami says it's the beginning of the end. Elon says Reuters is lying regarding the robotaxi, whether or not they're canceling compact car. They announced 1 billion miles of FSD driven. Robotaxi unveiled on August 8th. Tesla would be second in terms of compute, Elon posted. And then 10 days later, they got, 12.3.4 is released 10 days later. And then they reduced the subscription pricing. And then, of course, they just reduced the $12,000 to it's now $8,000. Jim Fan, who is a NVIDIA expert, machine learning AI expert, he said version 13 will likely be grokking language tokens. Elon had replied with a like. Analysis. So that's what happened in the last week, but you can see how fast things are moving. So let's watch a few of these videos. And let's start off with
tough week for Tesla. They're laying off 14,000 people, or about 10% of their workforce. Car demand is clearly weak, right? That's on the one hand. On the other hand, there's some transformative things going on that you and I've talked about, right? These imitation models are clearly better than expected at scale. They're having a larger rollout of FSD. So now I think they pushed FSD out to everybody who has the technical capability on their Tesla in order to receive it. They've talked about dramatically lowering the cost of FSD to $99 a month. I think they've hit over 1 billion miles driven now with FSD. And by our estimates, they're adding over 1 billion miles a month. So I think that their confidence that their data advantage is increasing dramatically is going up. So there's some speculation out there, Elon's throwing the long ball on RoboTaxi and all this. I don't believe any of that, right? I think that the conditions that get the company re-excited about RoboTaxi is that FSD is going way, way better than they expected it would 18 months ago in terms of the technology, Bill, in terms of the technology that they have available.
Yeah.
So they've reprioritized RoboTaxi. They said, we're going to move it to the top of our priority list. And, and I think Elon announced that they're going to have an announcement in August. Now, of course, immediately after he does that, analysts dig in and they called the regulators in a couple different states, and the regulators said, we haven't heard from Tesla. And of course, there were tweets that went out and said that, a couple states regulators had not heard from this. I don't think that really means anything, but because of course, they could launch this in any city on the planet, right? They get from Abu Dhabi to South America. And certainly there's a city on the planet that wants to be first to have Tesla robotaxis. So
All right. So I love that introduction. The couple things he said that we didn't know about was he said that in their estimate, Altimeter Capital, that it's not just they're now going to be getting 1 billion miles of FSD driven every month. That's a new number I've not heard of before. Some people were thinking we're going to get to the 6 billion number by the end of this year. That is 1 billion a month is probably right along that line, maybe
Faster.
even more aggressive. The other thing I should mention is Altimeter Capital, Brad Gerstner, he's come out recently saying that they've started to buy Tesla. They're a big believer in Tesla right now because of RoboTaxi. And so that's why they're doing these deep dive research into this space as well. What's your thoughts on his summary there?
Yeah, and Altimeter Capital and Brad Gerstner, they wrote kind of this legendary letter to Meta, to Facebook, when they were down at $80-$90 a share, about the need to get fit. And then the whole context was how much they were spending on hardware Reality Labs. It may have been too much. Basically their spend was too high, their capital efficiency was low, and to basically kind of relook at the business, get fit. And that's when you saw Meta go in, do the OpEx changes. By the way, you've seen Tesla do that now. And Meta's really turned it around, and now it's basically a $500 stock, and they're throwing off tremendous cash and gross margins now every quarter. And it's not that that letter, obviously the management team orchestrated the turnaround, but that letter was really kind of a message to the leadership team, and they actually responded to it, and they called it out as well in a favorable manner. So now Brad, obviously he's interested, and they've started a position in Tesla. I don't think anybody needs to tell Elon how to get fit with his companies. He goes in. It looks like some people are estimating that this 10% reduction is actually much higher through some of the Bloomberg reporting this weekend. And by the way, we were talking about this, I think, yesterday, Herbert. Nobody's talking about the fact that this is $1.5 billion, maybe $2 billion of OpEx coming out of the business, probably in June. And that run rate will continue through the rest of the year. So nobody's talking about that cost coming out of the business. That's obviously going to help operating margins in the company. So yeah, I mean, there's notable things that he said there about in terms of FSD miles, in terms of basically this is one of the very few firms that have caught on and say, hey, there's something special here regarding the use of real world AI, real world generative AI. And the fact that these imitation training models are actually becoming more and more effective than maybe even previously thought. So basically, Tesla can look kind of into the future and kind of put these training models on a run rate in terms of the amount of compute they have online, the amount of training they can do, and the performance improvements. And they can actually extrapolate, where they're going to be in total miles and where they're going to be in terms of improvement on all their dashboard metrics. So it's pretty exciting to see that they can actually start plotting some of this out. And I think that's why you're starting to see some of the forward planning for how they're getting the business ready to do this transition.
That's funny that you just said that. Literally, this second, I'm trying to grab it that Elon just tweeted out saying that they are. It's true that what James Dalma was saying, that they are 3 to 6 months ahead in terms of what we see in FSD. These guys see it even sooner. I'm just going to try to show you that tweet because it's kind of interesting.
Oh, it's coincidence. Okay, good.
Yeah, it's coincidence. Just happened just now. I can't find it though. I just literally just copied it, so I'm just trying to find it now. Okay, I'm going to skip it. Don't know what happened to it. So, oh, I know where it is. Sorry, everybody. Okay, here it is.
That's okay. Let's bring it up.
I think it's important because it's exactly what you're saying. It's actually very, very important, important information here. So let's got it here. So this is Elon just replying. James Dalma did an interview with Dave Lee a month ago, I guess. And in that, James was saying that, Elon and Tesla, they can see what FSD is doing. They're 3 to 6 months ahead, right? By the time you see it, by the time we see it, these guys are 3 to 6 months ahead. And he says, James is largely correct. We know roughly what the car will do in 3 to 6 months. When a more advanced AI model is trained, it will have several breakthroughs, but also dozens of bugs where it performs much worse. It takes a few months to fix those bugs and complete safety tests. And then by that point, that's when they release it to us. So, they're just another thing about Elon being ahead. They know what's happening. And so when you see his confidence, that's what it means. All right, let's watch the next bit of Brad Gerstner.
One of the reasons you invested in Uber is that as Uber grows, the power of the network effects gets even bigger, right? And so they have more riders, which leads to more drivers, which reduces wait times, which creates better experience, which leads to more riders. And you have this virtuous cycle that's created by that. Obviously, that's made it very difficult on Uber's competitors, and they're achieving the natural market leadership economics and share position that you would expect vis-a-vis Lyft. Particularly now that access to capital to Lyft, got a lot harder. So so we can start by just asking the question, how do we think Tesla will go to market with its RoboTaxi, right? In the case of Waymo, they've chosen to go to market both directly. You can book it on a Waymo app, or in Phoenix, for example, you can book it on the Uber app. So you can book your Waymo on the Uber app. And so in that case, Waymo recognizes it's a very small fleet, right? In that case, Waymo owns the fleet, so huge cost of ownership there for Waymo. They want to drive utility of that fleet, so they're using Uber as third-party demand generation into that, and they have an economic revenue-sharing relationship between those two companies. Now, of course, that's not the way, I would think that Elon might approach it, right? He has the potential to be much bigger. Tesla's a much better known brand. There are millions of people with the app already on their phone. So I think most of the people I talk to, Bill, suggest in the first instance that he'll build an owned and operated fleet, right? Where he may have outside financiers or rental car companies that take ownership of the car. But insofar as booking that fleet, you would go through the Tesla app. We could talk about, I throw it back to you. Let's just say that's the approach that they take. What are Tesla's chances of breaking into breaking down the network effects that Uber currently has on rideshare demand?
Well, I think you've hit on a key point, which is I think you have to separate Tesla from everybody else. Waymo, and I don't know if Cruise and Aurora still aspire to compete with Waymo or not, but they all have this very high-tech infrastructure with LiDAR that we've talked about. And they're all here to date working on a model where they own and operate all the cars, which we should get into in a little bit because financially, I think that's a complete disaster. Tesla has the benefit that they can utilize, theoretically, the cars that are already owned by their customers and not have to front the capital for each and every vehicle. If you look at the data we already have, Cruise was losing, $3 billion? Aurora's public, lost $2 billion 2 years ago, $1 billion last year, and virtually no revenue.
Okay, so let's just talk about Uber and Tesla. Ignore the others because they just explain how we don't even know how they're going to do this. But do you think that Tesla is going to create their own app, or do you think they're going to partner with Uber?
I've been saying this for a while. The hardware cost to have your own network are I think disastrous for other people that are trying to create these networks. And people looked at me like, oh, the hardware cost is not a big deal. Once the RoboTaxi network's up, it's going to scale. No, the upfront costs are tremendous, and the upfront liability and that capital are tremendous. And then you slice that away, and then you look at like what are the direct economics of each vehicle, like how much hardware is being added to remanufacture these vehicles, and there Tesla is blowing everybody away. Now, in terms of how Tesla gets to market, they are going in they're going to have the capability to basically drop this anywhere in the globe. I believe that they're going to roll out, FSD here very imminently. I think in the middle of this year, you're going to see another major region come online. And it's very soon, they're going to continue rolling it out to other regions. So basically, you will have the ability to operate FSD anywhere. And then the question of where does RoboTaxi start, or how does that start? Well, it will start in a region where FSD is approved for use, and then ramp as as FSD performance and disengagement performance improves to the point where it's a level 3, basically a level 4 and above type system. So the short answer is Tesla has a lot of flexibility. They are building a global solution. They're building the lowest capital intensive solution, and they're building the lowest unit economics cost structure solution, so that they can actually acquire the most amount of miles to have the most stable system work anywhere else in the world. So then when you take all of those attributes, and if we were to put all those attributes in a table and then put the other companies in, they're going to have a much higher barrier of capex. They're going to have a much higher cost per vehicle, which means their ability to acquire miles is going to be a much longer runway. They have fewer geographical locations, and the spread between Tesla and everyone else continues to just grow. Now, the next question is there a need for a partnership? Well, potentially. I mean, companies like Uber and Lyft have data that is interesting to Tesla about riders, about locations, usage patterns, and pricing. So there is information there that is useful to Tesla. Tesla is useful to these ride-sharing companies because they are going to have the thing that can run their operations at the lowest cost structure. Today, there are drivers in these seats, there's cars, there's that much more maintenance, there's all these different things. And right now, a lot of the liability is with the car owner on these ride-share networks, but both of them need each other. So there is a reason for a partnership. Does it have to happen for Tesla to launch? No, but they could use each other for scale, and they may do that at some point.
Very nice. We can explore that even further. In fact, that's what's great about Brad and Bill here, is that they're talking about their understanding of supply and demand that has to happen in a different scenarios in a ride sharing network, which they know a lot about. So listen to this.
Here's the thing. I think it really comes down to supply and demand. There is a beautiful emergent quality of the Uber model where supply and demand are matched, and it's enhanced with price through surcharges. But there are plenty of people who want to make incremental money that know when to get on the road. I have a chart which we can put up, which shows at one point in time the weekly pattern of ride sharing, and it's remarkably nonlinear, right? It peaks in the morning, it peaks in the evening, it really peaks on Friday and Saturday. And Waymo or anyone like them with an owned fleet here's a huge conundrum. Are you going to build the fleet to average or peak? And by the way, you lose whatever your answer is. If you build it to average, you're not going to be able to serve your customers during the peak at all. Like, they're only going to be disappointed. And if you build it to peak, you're going to have a bunch of very, very, very expensive CapEx sitting around doing nothing most of the time.
I think this is the most critical point, right? Because this is the same challenge that Amazon faced, which led to the creation of AWS. This is the same challenge that, most businesses face, which is they have very spiky demand periods. And if you want to be an incredible customer experience, you have to have something that can regulate to those higher periods of demand. Like you said, with Uber, they have a natural thing. They could just charge a little bit of peak pricing. They got more people who get out of their houses, drive their cars, pick you up. Wait times don't go up that much, and they benefit from that. And as the network expands, it gets even better. So,
well, and you remember, it goes back to, what was that word when Airbnb first came out? It was asset sharing. There's a different word that was used. But there's a huge amount of cars, especially in the US, that are sitting mostly idle.
Correct.
And so Uber gets to take advantage of that and utilize that CapEx. Anyone and Tesla may have a similar advantage just because they have enough customers. Someone trying to build a completely separate fleet, I just don't think it works. And I would encourage anyone that believes in it, or anyone that's let's call them a Waymo advocate, let's build a public Google sheet of the 20-year financial statements for this thing, and let's put it out there in the public. You're going to need hundreds and hundreds of billions of dollars, and I don't know how you answer this peak versus average. I don't know how you do.
So let's talk about some of the ways that might happen, right? As a Tesla owner, if I had the opportunity to put my Tesla in a pool, right, and allow it to be, pulled out during peak periods of time, for rideshare, I'd have a problem with that because I need my car during those periods of time.
Well, it's very likely. Here's another way of saying what you're saying, which is it's very likely that the average Tesla owner's usage map is similar,
of course,
to the Uber map that we just.
Of course, this is my point.
Like,
so,
Okay. Okay. Yeah, it sounds like you might have a different opinion than I do, Jeff, on this, but that sounds great. It sounds like Tesla and Uber, they both have these cars that they don't have to buy and own, but are available out there, that if there is a peak in certain peaks, they can, obviously you'll be paid more during those peaks. And so you're more likely to share your car out. That's why they're saying that the other car manufacturers, the other ride sharing companies out there, they're not going to be able to do this. They haven't thought this through. But Tesla's model could be very similar to what Uber did, where they're using customers' cars.
Yeah, the Tesla model is going to work. And it is, you could build a model around it now, and you can see the data. Some of these companies have, they're aware of this, and they may understand it, and they're trying to work through, honestly, how to refine their cost structures further to figure out how to break through. But in the meantime, in terms of attracting capital and attracting investment, there's a need to do some of these local, like geofenced expansions, and maybe they can do well in a given country or a given geography. It's hard to say, but it's not. It doesn't lend itself to a global solution that can really scale rapidly. And again, I go through the upfront costs, the maintenance cost, the upfront remanufacturing costs, the maintenance costs, the network infrastructure costs. All these things weigh on it, and there's certain models where this is on the consumer, and there's certain models where this is on the host of the RoboTaxi network. And like I said, as you pour through the financials of someone like a Cruise, you can see that the unit economics were busted. It appears in perpetuity. The question is, how do they break themselves out of this, or do they want to run this at some sort of strange, like, break-even point, when it should be a really super highly profitable business? It's really hard to understand. And again, some companies host this thing as kind of like a, trying to attract that SaaS investment under their companies. But I think the one that's truly built for scale is what Tesla is doing. And then others may follow and try to copy it a few years later, but it's going to take some period of time. But the other point that they were talking about, and I actually worked through this with companies and their manufacturing costs on this, is the whole balance of peak utilization versus average utilization, or peak capacity, planning for peak or planning for average or nominal. And depending on the lifespan and the lifetime unit economics that you're driving for, there are pros and cons to both. But in my opinion, and I've analyzed many situations, you're going to do better. You're going to do much better planning for something closer to a nominal or average capacity versus planning for those peaks. But it depends on what the duration of peaks are. And so what they're talking about here is, does Uber have a way to deal with those peaks better? Obviously, they have surge pricing and so forth, but can they actually meet that demand better and bring down that average pricing? Will Tesla help them do this? Could Tesla handle peak surges better and basically bring the average cost down, bring the margins up? That's the other thing that happens when you plan for peak. You're running your net utilization lower than peak most of the time, and therefore you've got fixed assets that are weighing on your cost structure more times than not. If you can't utilize, you can't run at peak utilization. So, but if you can run at more nominal utilization, you'd be more heavily utilized, and your fixed costs will be more in line and not be a weight on your unit economics. So I don't want to get too far down a rat hole on this, but there's the whole other conversation we're having is around planning for peaks versus planning for nominal. And again, I think with the Tesla network, they're going to have an ability to manage this with, you know, the millions of cars that they have out there. And basically you're going to have a choice of if you want to put your car in the network based on where you're located and based on what the demand is, you're going to get different, you know, different pricing models based on, you know, the availability of vehicles. And that will change as the network builds out, but it's not going to be one number everywhere in the world or everywhere in the country. That's for sure. Anyways, it's an
I'm
interesting
loving
thing to
this.
think through.
Yeah, I'm loving this conversation because we're finally getting to the deeper, more analytical evaluation of how to roll out a RoboTaxi network. And you've got Brad and Bill, who's got experience with Uber, and they're sharing that. And then you've got you, who've also studied this and actually know this market well. Thank you so much for sharing that. That's fantastic. Here's another conversation about customer cars. This is a debate that I've been having, and I've been trying to wrestle in my own mind. How would actually, Tesla roll out, customer-owned Teslas? So let's listen to their thoughts.
Here would be a straw man. Tesla launches with an owned and operated fleet to prove the model, to start building, right, the customer affinity with the product, the customer trust.
Which would unquestionably work because there's so many Tesla fans.
Correct.
That would want to do it just to be supportive of the
And
team.
by the way, it's a great product. It feels great. You probably already have a Tesla, so you feel good about FSD. So my hunch is they launch an own.
You might even launch it at first with only allowing Tesla owner or something like that.
Oh, interesting. Interesting. Like it's almost like a benefit of ownership. So then I think what they do is, my hunch is that they will open it up and partner with Uber. I think Uber would like that. I think Tesla would like it. And here's my argument for that. The only way you solve the peak demand problem, Bill, is that you have to basically have high utilization at lower periods of demand. You have to reduce the delta between your trough and your peak. And the way you do that is you pull in the Uber demand when your demand is lower, right? And so an example of that would be, if you think about in the city of New York, McDonald's has an app. You can go on the McDonald's app and you can order a burger, right? Or you can go on the Uber Eats app or the DoorDash app and order a burger. And so McDonald's recognizes that they want to try to flatten that demand out over the course of the day. And so they can yield manage that by having both a 3P and a 1P strategy. So it seems to me that the only way you really crack this is have a 3P and 1P strategy. And the upside to that, in addition, right, is that now you have a flywheel of Uber drivers, right, potentially building some mini fleets of their own, right? You could imagine somebody who says, hey, this is pretty accretive. We saw this with black cars, I know, in the early days, where you had one operator that may, have 2 or 3 or 4 black cars. You could imagine somebody who says, listen, I can make money by arbing this system and by having multiple Teslas in that fleet. So I think they probably launch it on a standalone basis. They get a lot of excitement and a lot of customer love for it. But my sense is by the time you scale this, it probably does have to be an open system.
Yeah, no, so that part I get, right? So that, obviously Tesla's going to leverage the customer cars that are out there. That's what Elon's been promising, that me, a car owner of Tesla, is going to be able to send my car into the RoboTaxi network and let it earn me money. But what he's saying is that at some point, this is not going to be enough. You're going to need companies like Uber and other fleet managers. Elon has already talked about that, right? He's going to need shepherds. Uber would be a good partner because they would be the one to buy fleets. Maybe they don't need to buy it, but they at least shepherd it. They would clean it out. They would manage it and control it on behalf of Tesla. The part that I still debate is that I just can't see that the very first iteration of RoboTaxi is going to be customer cars versus a RoboTaxi design, or maybe not even RoboTaxi first, but a vehicle owned by Tesla. They've got the inventory, they got the off lease. They'll take those. They'll send them out. Anyways, that's a small debate that we've been having. But what's your comments on what you just heard?
Yeah, when you're building a fleet, you have to think of all the services around it, to manage the fleet, to ensure they're charged and clean. And running properly to ensure, like, from ride to ride, there's this whole operational side of fleet management. And so if they have a partner and they have someone that can manage it, well, that's great. If they don't have a partner, then it probably does make sense to work with existing customer vehicles first. But we can have that debate. We've had that debate a couple of times on other shows. But what Brad Gerstner was talking about is, periods of low demand, and if you plan for peak or high utilization, that gap is the killer from a cost structure perspective. And that's why he believes that each of these companies have a 1P and a 3P, basically a first party, third party strategy. So if you're Uber, you want to deal with with closing the gap between high capacity and low utilization, what you would do is you would bring in the Tesla demand and onboard that fleet into your network. And if you're Tesla, could you bring in the Uber demand for in various regions, and also deal with the difference between your capacity and your current demand at that point in time. So could they work? The reason to partner would be able to deal with those peaks, shave them off. So you're basically running at high utilization all the time. So that's what he's talking about there, and that could be the reason for a partnership, and that will help their cost structure, both of their cost structures, immensely. Probably more to Uber, I would say, than Tesla. I think Tesla is actually going to launch with more flexibility and more capability. So it's exciting. What they're talking about is basically the fundamentals of unit economics. This thread, by the way, flows through everything you see Tesla doing. Whether it's they're taking out some factory labor and capacity in these reductions to deal with changes in demand. Again, what they're trying to do is they're trying to meet labor capacity, labor efficiency relative to demand. Because if you have large gaps, that's where your cost structure becomes out of whack. And that's why you see Tesla making some of these changes. And if you see them making pricing changes, $1,500 here or there, that would be nothing compared to having excess capacity and excess labor in the factory. So that same analogy, or that same kind of thought process, plays over in the RoboTaxi network as well, in terms of points of low demand and high capacity. That's where you have the biggest gap or unfavorability in your cost structure. So that's the reason to partner Uber, Tesla, to try to shave off those peaks and be able to share the demand and the low points better together.
Yep. Okay, and the last bit here is this comment about is regulation going to be the rate limiting step? It's not, because they can go city by city. There's lots of cities will put their hands up. Just today, Elon liked a post that somebody was saying, Alex Voigt and Nicholas Gibbs, that Florida is very open and willing to do RoboTaxi. And then somebody, Alex said maybe Florida will be first. Elon liked that post. Or actually, no, sorry, he replied saying maybe. But there's lots of cities. So let's listen to what Brad and Bill think.
Convinced than I ever have that we're going to see tons of cars on the roads with no drivers, in the years ahead. You and I are just speculating as to how the business model might come together.
But by the way, one last thing, I'm so sorry. I do think there's an argument that you might see this be prolific in a different country soon.
Of course.
Both China and India have much higher road deaths per mile. So you could see the government wanting it to happen. China, being more autocratic, could just wave their hand and change insurance rates, mandates. They could just make it a reality. Whereas we in the U.S., with the way our litigation and regulation work, are very unlikely to clear the decks.
Right.
And make way for something.
I also think, as I mentioned earlier, Tesla and Uber coexist in a ton of markets around the world. And there are a lot of markets that, frankly, are more innovative than the United States, have less regulatory headwinds. I could see this happening in Abu Dhabi or Dubai. I could see this happening in Singapore. I could see this happening in South America. I could see this happening in Mexico. There are a ton of jurisdictions where I expect this, unfortunately, before I expect it in the U.S., at scale.
Thoughts on that?
I agree. There's a lot of markets where they both coexist, and Tesla is a global company. This doesn't have to be, in the U.S. first. And I do think that smart local government is going to want to adopt technology. There's going to be a race to adopt new technology. You don't want to be the last city to do that. And a governor like DeSantis, or there's other governors too that are more data driven, that are looking at the data and saying what's the right decision to make. And some of this stuff is ideological too, so we have to be careful. But in general, I think this will become. By the way, I do think driverless cars, robotics in vehicles, robotaxis. I think this will also turn into some form of ideological debate. That's why Tesla really needs to be there with the data that says miles driven, accidents, be very clear. And I think, Gurley's point on other countries having much higher road deaths per mile driven. I mean, if you spent time in a lot of time in China or some of these other countries, it's unbelievable what you'll see on the roads. So it could be many, many, many times safer there. So that don't just look at the U.S. Look at some of the problems that they have to solve globally as well. And these are countries with 1 billion plus people. So that's why the opportunity is large. The competition's large too. There are competitive robo-taxi offerings that are occurring in China right now. It's just not clear though, how effective are they? How safe are they? What are the unit economics behind there? Are they being teleoperated? As we lift the sheets on some of these things, we haven't found a very profitable robo-taxi network. I don't know if you have, Herbert, but I haven't found a profitable operation yet, or one that even has a path to profitability.
Yep. Thank you so much, Jeff. This is great. Heard from these guys who understand Uber, understand ride sharing. They're investing in Tesla. They're understanding Tesla's advantage. They're wanting Tesla to partner with Uber. They share a lot of the same thoughts you have had and you've been saying for a while. So that validates the things you've been saying. Appreciate that, Jeff. And I just really enjoyed this kind of second level, third level, kind of deeper dive evaluation of how the unit economics would work, how the market launch would happen, who the partners might be. This is fun. And the reason we're doing this is it's looking like we're heading, even every day, we're moving forward. It seems to be happening sooner than many of us have thought, later than many of others were promising, but sooner than many of us have thought. Thank you so much, Jeff. Appreciate this. Bye-bye.
Yep. Thanks, Herbert. Appreciate it.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.